All right, private money, a little bit more in depth. Private money investors may use private money loan to purchase property that requires a large down payment or has a short closing time. Short bridge loans. You need to get in this thing within 30 days, 15 days. I don't like fast deals. So here's the thing. Private money is going to sound attractive. I don't like fast closes. Go with a traditional closing time. Pick your property, get your thing in, do your rehab, blah, 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 set everything up. Don't try to get in this thing where you're trying to do a fast close. You're going to miss something. Not early in the game. Take your time. I would piggyback on somebody who's doing a deal and let them walk you through the deal with you. Just saying. Some people want to do it on their own out the gate. I don't advise it. Run piggyback, run shotgun with somebody to see how this thing works. When they pull permits, they put the drywall up, pull permits, etc. Low voltage. You want to see how all this comes together. When they strip a house down, you want to look at those studs and see what's what. You want to be able to understand how this whole process works. That way you're not taking advantage of or something happens and you can't pass inspection. The investor may approach friends or family, happens, insurance policies, all that. Willing to lend money at a competitive interest rate, allowing the investor to secure the property quickly and generate real income and sell the property for a profit. Start building your network up now. I really would. Start thinking about people you maybe didn't think about before who can be your private money investors, because that can be. Thank y'all. I'm just going to chat. Thank y'all. Thank y'all. I'm glad. I always get sensitive to where y'all can actually go learn from me to make sure I give you all the right information. It's not really like I worry about it, but it's like I know it works, but it's like, how do you receive it, right? I can say it all I want to. Do you receive it well, right? So private money, man, is and I'll be honest with y'all, build relationship with the healthcare community. Because these physicians, engineers, I mean, a lot of them got capital. They don't like their 401k a whole lot. A lot of people really don't. And you'd be surprised when you can pull 50, 100 grand from or more, and you don't need much. Often, real estate, you don't need a lot. You get you a good hard money person, good private money person, but a good hard money lender, man, you just need a little something down, a contingency budget. Please take care of your credit. Get a little credit line here or there that you can pull from and find you a nice deal. Worst property on the street. I ride for deals even now. Even to this day, wifey and I ride around. We just say, hey, let's go duck off in third wall, or let's go duck off over here and just see what we find. And you'd be surprised what you find. Again, watch the replay. I gave a lot of gems on where to get properties from, and you'd be surprised where you find stuff. Seller financing. Real estate investor may use seller financing to purchase a property from a motivated seller. Right now, a lot of motivated sellers. A lot of layoffs happening. A lot of people are scared. A lot of stuff going on. A lot of motivated sellers. Get into this game. Take your time. It's going to be funny in these streets for a minute. And look, you can take advantage of it and do well in this market. Trust me. Real estate investor can use seller financing to purchase property. Motivated seller who is willing to provide the financing. The investor may negotiate a lower down payment or a longer repayment term period with the seller, allowing them to generate a rental income and sell the property for a profit without having to secure traditional financing. Work with them. Find out what they want, what they really, really need. Do you need money now? Can you wait? Do you need to get out of it? Subject to is also a way you can get it. You can acquire a property subject to the financing. You don't have to have the mortgage. I don't want to go into that a whole lot, so I'll throw it out there, but it's a good way to get into properties as well. But seller financing, and again, notice these four, let me go back. These four avenues have their pros and cons. They do. Everyone, traditional, pros and cons. Hard money, okay. Private money, okay. For me, I'm gonna give y'all a slightly different hat to put on. I'm not knocking the slides at all. Don't think I'm doing that. Seller financing. When and how do I need it? Let's not look at the cons for a second. When do I need this? When do I need that? What deal does this work for? And what does that work for? Take the cons out of the way because you're an investor now. Y'all been in UIL for a minute. What mechanism, what deal do I need? Traditional? FHA, right? Conventional, right? Which deal do I need seller financing on? Which one? Oh, the hell? Sorry. Which one do I need private? And which one do I need hard money on? Which ones? If I was you, I would print these out and make a binder out of them. Seriously. Get that, laminate them so you can write on them. I would have a whole binder going with this stuff. Seriously. Make a whole book out of it. This is going to be your cheat sheet when you're out there. Factors to consider. How are we doing on time? All right, cool. Factors to consider. Interest rates. Please understand interest rates. Your credit or the deal or the lender or money or private will affect the interest rates. This climate we're in affects the interest rates. Don't go into this thing, all this, no. And understand what is good interest and what is not. What standard interest is, what is not. Sometimes somebody may be a hard money lender. They can tell you new. They might want to put a scalp on your head. I don't know. Don't let these people take advantage of you. Don't. Have a team behind you that can at least tell you, nah, okay, get a referral. Everybody you deal with needs to be on the referral. Out the gate, especially y'all that are new and haven't done this enough. You only have 4 doors under your belt. Get a good referral from somebody who knows, yes, that's my guy, that's my lady. I deal with them. These are the HUD statements that I've closed on. These are the HUD statements I've closed on. If you don't know what a HUD statement is, talk to a realtor. Any realtor in the building, please let them know who you are so y'all can talk to them. You don't do real estate transactions if you haven't had a HUD statement closed on. That's a finished transaction at title company. You're done. If you do not have that, get with a realtor here. They'll show you what one looks like. Okay. Any fees associated with it? There's closing fees. Again, get with the realtor so they can show you how that works. Title company show you how that works. Down payment requirements. When we went over the when we went over FHA, things of that nature, you want to know what down payment requirements are necessary. Repayment terms. Hard money, they'll let you do interest only throughout the deal. You don't have to do principal and interest on some of these hard money, especially if you're doing the flip. You can do interest only and then pay them at the end after you flip out of it and close. It can happen. Learn how to negotiate and what works and what doesn't. Again, this is an investment strategy. Understand what works and what doesn't. Credit score requirements, that goes without saying. Collateral, you may need it here or there, but again, on the investment side, if you work the financing right, you really don't. You really don't need a lot, but still be aware if it's necessary. You may have to bring a 401k to the table. You may have to own land or something. Depends on who you're working with. I haven't, but it doesn't mean it doesn't happen. Steps to selecting your financing option. Number 1, understand your investment goals and financial situation. I can't overstate that enough. And I looked at it when I first saw the slides and I'm like, sit down by yourself or with your crew or whoever you're going to be doing this with and understand what it is that you want to do as an investor. For me, there's a certain number I'm trying to hit every year. When I first started, it was more or less, let me get as many properties as I can under my belt that can pay my property manager. I'm good. If I break even and make X, I'm fine. Because I'm more interested in the equity over time. I was fine. I had a career. I was fine. I didn't have to make that kind of money. So I wasn't so worried about flipping out or whatever. But yeah, I am going to put the slides. Yeah. So please don't worry about writing this down, taking shots. All the slides go in study hall. Don't worry about it. And I said this first class, I want to say it again. The best way I teach and the best way to learn, take your bullet points, take your notes, but take it in. Understanding. Go back, listen to the replay. Take your notes from there and then go down and really niche down on those notes, okay? Calculate the total cost of each financing option available to you. Run your numbers, basically. Run your numbers and know what lender's giving you, what the fees are going to be. Write the whole thing down before you commit to a deal. Please do that. And run it by somebody else before you say yes and go. Because once you take these people money, then you run your numbers. Evaluate the risk and benefit of each option. I do that, honestly. Worst case scenario, what's going to happen? Best case scenario, what's going to happen? Okay, if I can fall in between, okay, bet, I'm good. And have a fail safe.